about the sectors that you like and the stocks that you like, Rob, in just a second. But let me continue to ask you about this grinding out that you're talking about, because there has been a sense of disappointment in India that the kind of revival that we were expecting, specifically as far as the corporate earnings cycle is concerned, hasn't really started to show up just yet. What's your own take as far as when we could perhaps see a turnaround as far as corporate earnings are concerned? Even this quarter, it's been mixed. It's been a fairly patchy performance.
Certainly has been patchy, and that's not to be unexpected at this stage. I think the key for us is we are seeing companies showing pricing power. We have lower inflation, we have interest rates falling, and we have low credit penetration across the consumer. So as consumers start to get a bit more confidence, they actually have the capability of spending a bit more and increasing that expenditure from a more discretionary standpoint. So that doesn't happen overnight. Also, of course, you have the state banks who are not in a good shape still. The balance sheets are constrained. They're still working through non-performing loans and things, whereas the private banks are in pretty good health. The balance sheets are strong and they are extending credit. But we see a lot of the non-performing loans concentrated in the infrastructure side of things. That will improve as the government looks to clear the backlogs out there and does more like they're doing with the power sector right now. And we are seeing capital goods metrics start to improve. Those things will kind of filter through the economy and lead to better job prospects over time. But at the same time, really, we see more of the better prospects in the more consumer-centric area. And we're seeing companies showing pricing power, and we are seeing good results from some companies. So in the private banks, we're seeing good results, whereas not necessarily in the state banks. Some consumer companies showing, which have more steady businesses, are actually showing very strong pricing power. Godrej, for example. Whereas others, we had Jubilant FoodWorks, which we actually own shares in, have very disappointing results. But Jubilant's a much longer-term story as the discretionary improvement starts coming through. We're not expecting that to happen overnight. We have to be patient in that kind of situation and understand the strength of that business model as the scenario changes. But we do have to invest with a multi-year view. It's not something which necessarily manifests itself very short-term. But at the same time, we are seeing quite a few metrics starting to inflect, and that lower inflation, that more controlled currency, is certainly good news.
Absolutely, and we are hoping that we will actually see a further uptick as far as the credit cycle is concerned, and credit growth should start to pick up as well. But, let me continue with your case as far as the auto sector is concerned. And you like Maruti, you also like Tata Motors. We've had a fairly disappointing quarterly number come out as far as Tata Motors is concerned. I don't know if you've had the time to go over the Tata Motors performance, but would you continue to bet on Tata Motors given the exposure that JLR has to China? Do you believe that story at this point in time, given the fact that the domestic business also continues to be an underperformer, is looking more vulnerable today?
Yeah, I haven't had a chance to go over those numbers yet, but the JLR thesis, I think, has been playing out steadily, but clearly there are dislocations from China, the anti-corruption, the consumer sentiment on the back of the stock market gyrations there are real. But Jaguar Land Rover is more of a market share story. The product cycle remains very strong. The volumes are growing very, very strongly in the US, even though they come back in China. And it was always a transitional year for Jaguar Land Rover. So, again, we're prepared to wait. We think you've got value-creating management, you've got strong product suite, and a strong global demand. That's going to continue growing over time. And they're value-creating. They're very shareholder return focused. The domestic business on Tata Motors is basically in at zero value in the shares anyway, so that's more of an option value. But certainly the truck volumes are starting to pick up. So mid and heavy goods vehicles starting to see volumes grow at 50% year on year from a very, very low base, but they're not really creating anything in terms of profits as yet. The autos and two-wheelers, actually we've seen very good numbers coming through.
Yeah, I was just going to ask you that. You preempted my question. I was asking you about the two-wheelers, Rob.
Yeah. Well, the two-wheelers actually more robust than a lot of people expected. Clearly, the rural side has been a bit softer. The minimum support prices in agriculture are not growing at the same rate as they were previously. NREGA is being de-emphasised by the government. I think those are sensible things within the social policy. It's more about getting the whole economy going, and then that dragging up the lifting the GDP per capita for everyone, and that's going to be better for the poor. So playing the long game there as opposed to just pumping out social handouts. So perhaps the rural side is a bit slower, but the four-wheeler, we think there's a huge amount of pent-up demand over the last few years. When the consumers have been more cautious, more sitting on their hands, building up their personal balance sheets. And actually, as people get a bit more confidence the economy is starting to revive, that the job prospects are better, inflation is under better control, then people can start accessing credit and going for some of those big ticket items that they've been holding back on. And so that's where the four-wheeler story comes in, but also two-wheelers to an extent. And we think we're very, very early in that story, but there's a huge amount to play for, and obviously penetration levels in India are extremely low.
Have you picked up anything in the two-wheeler side already?
We have a little bit of Hero, about a 1.5% position. We prefer Maruti for the four-wheeler side of things, but do think good franchises like Hero are okay.